Good morning, traders. I'm Dan Papalonis, Senior Market Strategist here at RJO Futures. I'm here to talk about the currencies today. Coming into today, ECB, Mario Draghi, ECB left rates the same. They're not moving anything. Inflation is still relatively low, 0.5%, not moving much, almost deflationary in some respects, in some categories. But one of the key things that has happened today is that Draghi was talking Q&A session and expressed that they are going to try to do some form of QE. Now, he said that in the past. He's been saying that over the last year or so. It's probably losing a lot of credibility now because every time he says that, nothing actually happens. Today, he expressed that there's a possibility we could see something as early as June. On that news, we saw the euro tank, the dollar rallied, dollar's positive now, the euro's negative, obviously, and now we have Yellen talking. So she's going to be talking for a little while. Inflation rate, across the board is 2%, and this inflation rate is a calculation off of the Fisher equation, which basically equates that if interest rates are close to zero and we have an inflation rate of 2%, the economy should theoretically get better. But because, especially over in Japan and in the US, we've created so much liquidity, we're almost in a liquidity trap. And that's one of the reasons why we're tapering right now. It's almost it's negative to continue to print out money in a deflationary situation. Our inflation rate went from 2% lower because we were printing up more and more money. So as we get lower and lower, or we taper more and more, in theory, we should start to see inflation head higher. We get above 2%, theoretically, job market's supposed to strengthen, and so on and so forth. And getting to the job, or talking about the jobs report last month or last week, our unemployment rate has actually reached a point where the Fed was supposed to start raising interest rates, but so many people fell out of the workforce that they can't do it. It would be detrimental to the economy right now to raise interest rates. We still need that almost 0% interest rate. So I think going forward, we're going to start to see the ECB having to do more structural changes to create inflation, which theoretically the euro needs to come down. We could see the euro back at levels, when it was first implemented, where the dollar was trading close to $1.50 to the euro. So my thought is that going forward, we should see some strength in the dollar. I would imagine that we do see some weakness in the euro. And maybe going forward, we'll see much greater weakness in the euro to create inflation over there, and we should theoretically hit our 2% inflation rate here in the U.S. So if you have any questions, feel free to give me a call. Dan Papalonis, Senior Broker here at RJO Futures. Futures and options on futures may involve substantial risk and may not be suitable for all investors.